Good morning, ladies and gentlemen. Martina, I know that there's not just gents here. I don't know if Michael's just referring to myself and Kay, but yes, we do have both sexes coming to the Flow Show. Plenty of women traders that I know. So yes, Martina, I've got your number. Morning, Kay. How you doing, mate?
Morning, Ryan. Morning, ladies. Everything is fine, mate. And the new day and new letters. I was thinking about this song, like letters being written, never meaning to send, but he sent them, right?
Yep. The postal service has been a busy old bunch. If they're going out by post or if he's just sending them out via Truth Social, who knows? But yeah, it's easier to type them out than write them out. Anyway, yeah, Mr. Trump's been sending out his tariff letters, which we'll go over in a little bit. First of all, just want to bring your attention to what's coming up. Our transition from Forex analytics to trading analytics is going to be happening sometime in the not too distant future. If you want to be the first to find out what we're up to, then join our mailing list there, become a first adopter. There'll be plenty of pre-public launch bonuses and benefits if you jump on that list, and you'll also enter our draw for, you can win one of two $25,000 trader funding program accounts. It was one in June. We're doing two this month. If you're already subscribed, don't worry, you'll be entered into that draw for free. And our first winner was Lindsay. She got picked out of the hat this weekend by my very own hand. So jump on that list, and you too could benefit from that. Right, let's get into it. Going to start in Australia, and before we get to the RBA, it's been reported that Australian bonds have drawn the largest Japanese inflows in 2 years. So if anyone wants to know where that money has been flowing, well, some of it is coming from Japan into Australia. Whether it's the big daddies, GPI, or anything like that, we don't know, but we get an idea of where some of those flows are going anyway. So over to the RBA, where they were expected to cut rates by 25 pips, but did a little rug pull on those expectations and kept rates unchanged. They said inflation is moderating, but the outlook is still uncertain. The vote was 6-3 to keep rates unchanged, and they're also going to be beginning to publish unattributed vote records. The statement said the labour market remains strong and that risks to inflation were more balanced. They said the June CPI data was slightly stronger than expected, but broadly in line with forecasts. The board judged it could wait for more data to confirm the 2.5% inflation target path. RBA's Bullock, speaking in the presser, said the effects of the 50 basis point cuts are yet to flow through, and they're cautious, and that cautious gradual easing is appropriate. Says more data is expected by the next meeting. They're waiting to confirm that CPI is sustainably on track to 2.5%. They said the likelihood of a severe trade war scenario has abated, and they are confident they're on a path to ease further, saying that this decision was about timing rather than direction, and that they're not keeping interest rates high for a just-in-case scenario. Kay, first real, well, I say first real surprise, bit of a surprise. But going back to the 50 pip cuts as an excuse, is that sort of clutching at excuses?
It looks like it. I mean, to me, there was enough in there, as I said, to go for the 25. But let's not forget that Bullock is still in very much deep inside her a hawk, right? So perhaps she persuaded the others for staying on hold. The 50 BPs is perhaps an interesting one, which they may use if necessary. But then, if you look at what's happening on trade in general now, Australia and New Zealand, they're both relatively flying under the radar. We know the 10% blanket tariffs. They probably no one is going to escape those, but yeah, keeping it on hold. I think there would have been enough thing, but the 50 BPs, it seems like it's going to become a weapon in case a weapon. I mean, a weapon against any big downturn in economic sentiment or growth or a much worse labor market, for instance. But they seem to keep those things now the stick behind the door. But I'm not sure under Bullock whether they ever going to resort to 50s.
No, I don't think they'll go to 50s again.
No.
But I can't recall them bringing up waiting for those effects to come through in the last statements. It might be in there somewhere and I've missed, but just seems strange to bring that up all of a sudden. But
Ah, it's
anyway,
all end up becoming denominator of uncertainties, right?
yeah, exactly. So yeah, that's made the future path, shall we say, a little bit more uncertain in market's eyes as to what to expect from the RBA and when they might get back on the rate cut path. But Bullock is a bit more of a hawk than a predecessor, so she's got it in the locker to pull surprises like this. So anyway, that gave the Aussie a little bit of a jolt. We're back up around the 65, 40, 50 area. We'll look at the chart on that in a little bit. A bit more data out this morning from Germany, trade balance data, an improvement to the surplus, but weaker activity overall. Exports down 1.4%, imports down 3.8%. We also got France trade balance as well, which was a little bit worse, but no massive changes in those numbers. Exports were up a touch, although imports stayed the same. They were revised down on the prior month. But anyway, Germany showing, as I say, that lack of activity that's supposed to be picking up at some point. We need to keep an eye on UK politics and what's going on with potential tax hikes coming up. A UK PM spokesman said that they declined to rule out the prospect of a wealth tax. And although they said the Chancellor has said in the past they're not bringing in a wealth tax, well, we know what political promises are made of these days. This, as I say, is going to be something rearing its head into the next budget, which may come around September, October time, because the Chancellor has been promising no tax hikes. It was a parliamentary pledge, an election pledge. It was also an election pledge to cut welfare, but they broke that promise, hence why we might now get tax hikes. So we'll have to see what the market is going to think of that, because if the economy isn't doing well, the last thing you want to hit it with is tax hikes. So that could be something that investors keep an eye on later on. We'll no doubt get the super nuts of what they're going to do before then. The ECB were out with a bit of a paper saying that the risks to euro area financial stability have increased due to a sharp rise in global geopolitical uncertainty. We've had someone who is a former Fed head who could potentially be in the frame to take over from Powell. That's former Fed's Walsh. Says the Fed should lower rates. Says tariffs are not inflationary. He criticised the Fed structure, citing plenty of dead wood. So he understands Trump's frustration with Fed policy, and also said, repeated that tariffs do not necessarily lead to inflation. Kate, are we likely to hear from a few more people who might be throwing their hat in the ring?
Well, he's one of them. I don't know how many others there were. We know from the two feathers who are in the seat right now. Then we know Besant. Were there any other any other serious candidates on the
Oh, there's
sheet?
a long
Not.
list. There's a long list according to Besant. No, we don't know who's on it.
Yeah, okay.
Apart from
Yeah,
himself.
likely all those closer to Trump are going to call for rate cuts. But it's just an ongoing musical chair game. I wouldn't attach too much importance to it right now. We know that all Republicans basically could be on the score sheet, and they are asking for Powell to cut rates. I mean, yeah, okay. So be it. We will wait and see what's to happen. I'm not excluding any rate cuts by any means because at the slightest or like let's say a bit more pronounced downturn in the U.S. economy, I think that they will cut and perhaps even more than what the market may expect somewhere based on those inflation expectations also. But it's not going to be this whole wing of speakers and candidates to replace Powell who are going to force the Fed to cut unless there's other rebels now popping up at the Fed to start pushing him. But then we are going to have a bigger bun fight than what we see now inside the Fed.
Yeah, very much so. No doubt that's going to be picking up later in the year as well. There's also been a bit of research from the New York and San Francisco Feds saying that there is a nearly 1 in 10 chance that interest rates will return to zero over the next 7 years. So that means something's going to be going tits up for that to happen, but they're counting the beans on that one. Anyway, speaking of Mr. Besant, he was out and about. So this was before all the letter stuff, saying we're going to have several trade announcements in the next 48 hours. He said he got a lot of new offers last night. He also spoke about currency moves, saying that the FX moves we've seen are not out of the ordinary. An EU spokey said that the EU will continue to work on the trade deal up to the July 9th deadline, saying that they've made good progress in talks on an agreement in principle with the US, and their aim is to find an agreement before the 9th of July. A German government spokey was counting the beans as well, saying time is money when it comes to tariff negotiations. Yeah, good luck. Right, so then just before I was going to hop off for my dinner, Mr. Trump decided he was going to slap Japan with a tariff letter saying that they will be added a 25% tariff or levy, whatever you want to call it. This was a 1 pip up on the 24% that he threatened on Liberation Day on all these big tariff boards. He told Japan if they want to open up their closed trading markets, eliminate tariff and non-tariff policies and trade barriers, they will consider an upward or downward adjustment to these tariffs. There had been touted that they might hit Japan with 35%, which was higher than obviously the Liberation Day. So the market didn't really know what to do with that at first. It didn't know whether it was better for Japan to get a lower tariff or worse that we're not close to a deal. The outset is that they're not at a deal, and that's why the letters went out. So that's the first thing. So that's what the market took in the end, that it was bad news for Japan, and so it gave the yen a bit of a whacking. He also did the same to South Korea and plenty of other countries. South Africa got 30%, Kazakhstan 25%, Malaysia 25%, blah, 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 blah. Most of those were on or around where he said he was going to tariff them before. A lot of them coming in a bit lower than the Liberation Day numbers he threw around. But what the main point of all this is that it's pretty much can kicked until August now, because none of those are going to kick in until the 1st of August. We were also watching to see the prior comments that any countries negotiating in good faith may get some leeway. Well, Europe was one of those because it was cited by EU sources that they will not be receiving a letter setting out higher tariffs from the US. But then White House Press Secretary Leavitt said more trade letters are coming for at least 12 countries. And so that's where we are at the moment. Kay, what does it mean for the markets? It seems half the market doesn't know what to do with it, and the other half does.
Yeah, because
bad news US and good news that others haven't got letters.
yeah, I mean it's now all down to who receives letters or not. The EU one may hit the mailbox, the truth box today or tomorrow, but it is so that nothing is going to be decided, set in stone before the 1st of August, right? So that deadline keeps on getting pushed back, and I'm sure that if there are complicated talks, there may be more pushbacks. But yeah, so far the euro escapes. As I said yesterday when it came out in our room, this is not good news for Japan, because that simply means that the US is not ready to make too much concessions to one of their best trading partners. Um, is always hiding behind those tariffs that Japan is putting on, and the non-tariff barriers like quotas and things. But yeah, it is a bit worrisome actually for Japan, I'm going to say, because I mean, for them also, I think they are very surprised that they haven't got a deal yet. I can't see it being good for the yen right now until they really find some sort of an agreement. So still in the same situation as I was yesterday, although I was long euro yen, and I happily took my profit. Well, it was done for me overnight. Because you never know what the next line may be. We know that Akazawa is constantly on the phone, or even traveling to the US. So sooner or later they may find some common ground. But in the meantime, I mean that yeah, it's not really it's not good for Japan. I can't see anything good in there for Japan right now, because 25% tariffs are quite steep compared to what they had before, which was basically because there's those de minimis rules. Anything above would have seen some kind of 4.5% tax, but now you add 20% on top of that, which is, of course, not a good thing for Japan.
Yeah, yeah, and well, they're still busting it up with conversations, so we may get something cobbled together. But yeah, it's looking a bit bleak at the moment, but that could all change in an instant. And no doubt, as said, we're going to get a ton more headlines from his orangeness today. Just one other thing to pick your attention. This Amazon Prime Day event is going on, and Adobe are out with a report saying that it's expected to see just under 24 billion in online sales across US retailers, which will be up 28.4% year on year. So a big increase in spending, whether that's dollars terms wise or whether that's actual goods sold is another question. But that'll be watched closely to see if there's any wobbles in the retail sector for the US. And they're very quick to get these online sales numbers these days, especially for the old Black Friday and Cyber Mondays. They can get those out pretty quickly. That's it on the headline front. Kay, anything else?
No, I think we covered the most important things right now. Maybe on the geopolitical front, Trump saying that after all they may send more weapons to Ukraine, and Russia already reacting. Uh, well, it's not impacting markets right now. Let's put it that way. Ah, we lost you.
Oh no, I'm here. I'm here.
Okay.
So yeah, a bit of a quiet day on the calendar. We've not got a lot out. We've got NFIB Small Business Optimism Index, a little number there, but other than that, it's pretty quiet today on the data front. So it's all going to be about trade stuff coming later on. Right, let's start here. Dollar yen still looking. The yen's still looking pretty weak for the moment, though we are struggling to make headway through a couple of levels up here, 146.29.30 and 146.50. I think we're looking at the clock for this one. We know what Japan's getting now, so really I think that the balance of risk is shifts a bit. We'll get a bigger price move now if they get a deal today, tomorrow, by that deadline. And then whether the market is going to forget about the trade stuff pretty quickly because it's got another deadline to watch, August 1st. So it could drop off the radar. But for lack of data, I think it's going to be staying on there at least today and maybe tomorrow. And then we'll see whether the market's going to get back to trading what it was before. Or whether it's going to continue this theme. I'm a little bit long. I hit it on the Japanese truth bomb yesterday, 145.89. So I'm just seeing where this wants to go for now. We've done a bit of slicing. I'll do a bit more if we get up back towards that 50 area. But otherwise, this is just a watch and wait and see where it goes from here. A lot of pairs doing the same. Euro dollar. Had this move all the way down. Suddenly, we're not looking as bullish as we were before. Got down. We had some. It got through the figure. Then it hit this other area around the 116.80s. Bounce from there. We're back above 117, but we're struggling again up around this 117.50 area. Bit of a pivot level. This one's turning into, but it's not looking like it's shooting up higher. Kay, do you reckon, do you think a lot of markets are in a bit of a pause mode, wait and see what's coming?
We have to, right? At least in the short term. We never know if there is going to go a letter out to the EU. If leave it set that there will be more. I think that's what holding the euro back for rallying higher. I bought it yesterday on that dip, and but I've already sold like over 2/3 of it out. So I'm not how shall I say? I'm not really wanting to keep too much open on certain currencies because as we have already been talking about so often, it's all down to imagine that today the letter goes out to the EU. I mean, we're trading maybe 116.20, 115.80. Who knows? So it's all a bit of the real long termers who are trading obviously tariffs and what the results would be when those would really be implemented. But they also trade different stuff like the big beautiful bill or the outlook for the fiscality and stuff in the US. I don't think that they would be overly alarmed by a 100 pip drop or 150 even pip drop in the euro because they also know that the next day there could be an agreement and then we're back at 117 and a half or 118. And but in the meantime, for us traders, I just don't want to risk too much. I've bought it, and I said I'm quite lucky that I was in front of the screens. Then I managed to get it at 116.90. Let some go after 15-20 pips. Then I let some go around 117.40, and now I'm like a third long. And but my stop is at entry, and so there's absolutely no risk in the book anymore. But I think this is how on the short term we are going to be. Uh, um, yeah, we are going to be dragged around by all those new tariff things, and it's uh, for a new trend to develop. I think we're going to have to need certainty. That's where it all always comes back down to if we get certainty or not. And for as long as we don't have certainty of what we're going to have surrounding those tariffs, I still think that a shorter term approach if we don't have any long-term positions ourselves in the book. A shorter term approach here is one when you see a move, take at least partial profits and see what's going to hit next.
Yeah, that's very much so. And I've actually just done that. I've just locked a bit off me dollar yen at 26 in that little bump up there. But you're absolutely right. If you're trading short term around these markets, grab some profit if it's there. Don't. If you get some profit and you can get your stop up to even break even. That doesn't mean entry; it means break even. Then you can sit and relax and see where it wants to go. But stick some in the bank. If the worst you end up with is flat with no loss, then that's a win in itself. So, and that's why you got to approach things. Aussie dollar, that had the RBA spike right in there. And now we're turning around this zone or sitting bang in the middle of this zone pretty much from this old resistance area up here, 36 through to 50. So we're looking a bit better this morning, but are we going to break on through again and head up towards the highs and get through that 66 figure, or are we just going to waffle around a bit and then head back down? We held just above that 80 level. We've seen a prior lows just coming up, put it up shy of that. So this level proved itself once again. Had a couple of goes at that before we got the move back up. So still in with this trend. Okay, we're not looking like we're breaking this trend anytime soon. So for the longer term, if we get over all this noise, that's what you may want to look for, whether we resume some of these trends that have been going on. Dollar Mex, that one keeps having a little rally, but they keep getting sold into. So this trend is another that's not for turning. Me and the K-Man still waiting for this 1850 level. It's taken its time, but we did get another low later on Friday, and we're nudging back down there. The rallies are pretty weak for this one. We're hitting the underside of that fib level there, or the 50 retracement, 1877. So even levels like that are holding rallies. So for all intents and purposes, this fingers crossed is still heading down a bit. Okay, it's going to make it hard work, isn't it? To hit
Um,
that 1850.
uh, you know what I think, Ryan, is that more and more people are paying up around here because they have the same thing, the same feeling. It's making us work, and it's not going to test for an 1850, which makes me think that we may not even stop at 1850 if we get down there and all of a sudden accelerate through, because not everybody, but a lot of people being in, let's say, the medium instead of the long term, the medium term carry trade are going to. I will have seen this. 860, 62 bottom, you go back up to 1880, then you do 1857, and before you know, you're back into the 1870s. And now everybody says, like, yeah, what if? And I think a lot of people are now starting to buy them back here. And unfortunately, I don't. Well, I always have enough to slice, but it's not like really big enough to continue slicing much. Otherwise, I would have done the same and like take a slice back here and then just take my bids away around 1850 and see if we don't get a one of those moves where the next stop is 1830 or 1820 or so, you know. But yeah, we were talking about these dollar mix, and quite a few people in our room are viewing these lows as opportunities to play it from the long side, but then also take relatively fast profits anywhere in the 1870s or so. It is possible because there's enough uncertainty surrounding the dollar right now. The dollar is not really falling out of bed anymore. But I would still say, if you look at this, even on the 1 hour, like you're watching, but if you look at it on the 4 hour, daily, whatever, this thing is like really looking still very, very bearish. For as long as we stay, start with 1880, 82, but then you have another resistance there already in the medium term around the 1903, and then you have this whole zone up to 1920s. So those who are in the longer term positions, they are absolutely not bothered by those little swings around. We never have to forget that this is still an emerging currency, emerging market currency. So the moves there are are wider than what you can have in the euro dollar, for instance, because there's not the same liquidity. Um, if there's anything bad, of course, coming out surrounding trade or migration, also you will see the jump as we have had several times. But I compare it a little to what's happening in oil, which is uh, relatively the inverse risk approach, but all those spikes in oil are getting sold into as well, the major spikes, and we are seeing still the same thing happening in MEX. So I'm really not worried about those 15, 20 big figures, which is like 1% or so moves in the mix right now, because the medium term doesn't tell us anything about a potential reversal to start. Yeah.
Yep, very much. 100% agree with that. Ali, what do I mean about break even and entry and whatever? Okay, if you take a trade, you got a 20 pip stop. If you take half of your trade off, 20 pips profit, that means you are at break even if you lose on the other half. If you move your stop up on the other half to your entry point, then you are potentially 20 pips up on half your trade if you get stopped out after that. So you're locking in profit. So you could adjust your stop to get yourself to break even if it's a stop loss. It's how much you've sliced the trade versus where you put your stop after. Those little adjustments you don't have to take everything up to break to entry, but as I say, it's just about managing how you your risk and what it means by moving your stop or keeping your stop, and how much you've taken profit. That's what I mean by that. Right, where should we go from here? Look to Aussie, Euro Sterling. I might be getting a little bit of a twitch to get a bit long, K, on this one. It's done a lot already, which is I would have liked to have got long down at the 82s, but it never got there. And then it's just been I've been completely ignoring it pretty much all the rest of the way. But I'm getting a little bit twitchy over the UK stuff and what's going to be
Yeah,
happening later with this thing.
I agree.
So I might be looking at maybe getting in some longs. I was looking at getting in some shorts on the ECB stuff, but not with this flood of money running into Europe at the moment. I'm not going to be on the short side. But yeah, I'll speak to Mark on the trade off. You know, this could be heading back into the 90s if the shit hits the fan later.
Yeah. Oh, well, yeah, one step at a time, but I completely agree. I've got this impression that twice now I missed to buy close to 86, and I was hoping for it to get back down there and give it a go myself. Yeah, I agree. Sterling is not looking that great anymore. Yeah, I think it's not a bad idea. Maybe if there is a bit of a setback. Oh, obviously, if you look at if you think that there is a risk that the US sends maybe that's going to give us an opportunity. Imagine that the US sends a letter to the EU today or tomorrow, and you get a setback in all those European crosses. Maybe that's going to give the opportunity then. But if we don't get it, I tend to agree, and I'm actually in full agreement that Euro Sterling could push higher.
Yeah, it'd just be a case of deciding where to potentially buy it. You know, maybe a
Yeah,
break of 87.20 up here, this area.
it's already
Get a
too
break
far, in
there.
my opinion. Mm.
Yeah,
If you look at it really short term, we were looking at that this morning as well. One of our traders in the room, Sendal Fox, was looking at a bit of a bit of a bull flag in the euro sterling, and we are actually testing the top line of it. So just a simple little line there, and we are testing the top of it. It could be just already enough to go and have a retest of those prior highs. But if it's a more medium term trade, yeah, why? You know what? If it's a real medium term trade, maybe like do a part now, wait for a day or wait for a day or so to see if Trump wants to send a letter to the EU, and if not, at the rest, and then we probably going for a move up above 87s.
Yeah, yeah. We shall see. Let's see what happens. Never thought I'd be praying for a letter from Trump to get in a trade. But there you go. That's the markets we're in. Right, okay. I'm going to ping it over to you for a couple, mate.
Okay, let's look. You looked already at quite a few things. Huh? Pop, 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 pop. Well, let's look at the cable then. I don't particularly like what's going on in the cable there. Sterling is a bit weakish, and and to zoom in a little bit, we're turning around that 136.20, which is kind of the hinge for the moment. Used to be a break level, but now it's more rather the hinge, and we keep like getting those little failures coming back down. I don't really like it. As I said, if there's anything really positive dollar coming out, this is one that could go for perhaps a little bit of a walk lower. Just to reply to what Ali was saying there, considering market reaction on trades, can we say that sterling short and Aussie dollar short are the best? I mean, sterling, they have half a deal already with the US. I mean, I wouldn't be basing it on trade potentially. And as I said, Aussie dollar is the, they're flying a bit under the radar. So I wouldn't say those two are, for now at least, unless risk completely drops away because they are both risk currencies. I would say cable is probably one of the weaker ones if the dollar gets a bit on its own. Yes, I'm not so sure about the Aussie after the RBA yesterday, and also because both Australia and New Zealand are kind of flying a bit under the radar. So I'm not really sure whether those are those Aussie or Kiwi are the best ones to choose from. But anyway, cable here 80.90, and we are on it again. All right. So I think if that breaks, there may be a bit of a chance to go and look at it a bit lower, in my opinion, because it's looking a bit weakish, and what we have just been talking about with Ryan, and I'm quickly going to show and thank you, Foxy, in our room for pointing that out. Bit of a bull flag here on the euro sterling, and we are testing the top side of it. So a move through could relatively quickly bring us back to the top end of what we have seen of late. Again, if you're trading euro sterling, be mindful about the risk or the possibility at least that EU gets sent a letter after all. So be just a bit careful with what you do if you're doing uh, um, euro crosses or euro dollar also right now. As a matter of fact, I lightened up my euro dollar again as well. Okay, I was a bit long euro yen, as the people know in our room. It's one of the reasons why I took it off. But the other one is, yes, as I said, the yen. I've been long several times in this in this move, but I missed a few because of the uncertainty surrounding trade. But for as long as there is nothing bad happening in Europe and nothing good happening in Japan, this could still push higher up to 173. But I want to just take the pips and run because I don't know what's going to happen on the European side for one, and for two, we don't know whether all of a sudden Japan finds an agreement with the states. So I took my profit just ahead of this extension today, but all things equal, any move back down to let's say around here. I would say low 170s if we would see a move there without the situation changing too much. You can see this level here as well. This is going to be the level that we need to watch for those trading crosses on the euro yen now, I think. Just it's quite simple. It's 170, okay? But if things continue to look a little more rosy for the EU and not so much for Japan, 173 is possible. Yeah, the Kiwi is only following the Aussie from a distance because we saw Aussie Kiwi going higher, and we have RBNZ tomorrow. They are, oh, hang on a minute. No, it's okay. They are, this is my phone. Can I just give me 1 sec?
Here you go, mate. I'll tell you what, I'm not singing for you while Kay's off. You can keep that. Let's see how long you're going to be.
No, I'm here, mate. I'm here.
You're back? You're back?
Yeah.
Cool.
Yeah. So we have the RBNZ tomorrow. They are expected to keep things on hold. In current context, I would say if there would be, well, the surprise maybe from their side would be a cut, but if there is a bit more of a retracement from those lows, I think keep an eye on again this 60, 30, 35, 45, 35, 50 zone. A bit similar to the Aussie, but here it's in the New Zealand case. So here again, I think this zone we have seen several times that we have traffic over there. This is the zone that we are going to have to watch for post RBNZ decisions. On the downside, the prior low here, perhaps it's I should have been putting this one on there as well. But even so, I mean, it's just around 60. But I think the most important level that we need to watch for tomorrow post RBNZ, if we would have any surprises here, is 59.65.70. If that comes down here and we bounce, fine. Then we are going to continue to probably trade in a range and sideways. If this starts to break, I would say like be a bit careful because there could be more in it then, and we may have a look at 59 the figure or even just below. Okay, so bear this one in mind. 59.65.70 on the Kiwi. I think this is an important little level for post RBNZ or RBNZ. Yeah, gold and silver. I don't have much to say there is. Up and down and in the middle, we did cap in the 40-45 zone once more. Even after sending those letters, which was interesting. So this is really our first resistance here. Back to neutral, I'd say, where we are now, and still watching the same undersides 85.90, 32.85.90. If you look for the wider now, I think it's 85.90 here, still 70.75, and in the meantime 40.45, 33, 40.45 already, where we stopped again yesterday evening and overnight. That is the first little resistance. Okay, so I think a bit ranging there. Silver, I think the same thing. Tried again just above 37, 37 and a quarter, failed back below 36.85, which is really short. I should put it on the more short term, which is short term. An interesting little level as well. But for as long as I said, and will repeat, for as long as we are not going to see much deeper into the 35s, this is still bullish. This is just for the time being a bullish consolidation for me. And silver can be a bit volatile, but whatever happens, for as long as we don't stay under here, that thing is still quite bullish for me. I don't have too much else to look at today, Ryan, because we are just so dependent on whatever. Oh no, I want to show one because Mark in our room, and I especially if there is something maybe not so good happening for the euro is Euro Aussie. That may have done that may have ran its course. And on the back of the RBA, it is really losing steam. We are on short-term support here, short-term trend line support here. If it gets lower and if we get a confirmation back under 179, this could be on its way back down to 177s perhaps. So this is one I'm going to keep an eye on as well. I have not traded it yet, but any move back up somewhere in the middle of this zone, give me a 180 print, and I'll try perhaps a bit of a short as well on this one. I tend to like Aussie a bit more again, so I'm kind of looking at some or the other cross. If it's not the dollar, one or the other cross to start playing it against. I would do Aussie yen, but perhaps it's already gone a fair bit as well. And with that, Ryan, back over to you, mate. Yeah, why not, Dimitri? Sterling Aussie. Haven't looked at it lately, but Sterling Aussie could be a candidate. Back over to you, Ryan.
Thank you very much, mate. Demetrius, yeah, we can have a look at that in more detail tomorrow. Thanks everyone for coming to the Flow Show. Have a great day. Watch out for those truth bombs. Thank you, Kate, as always. We'll see you on Face. If not, we'll see you tomorrow. So have a good one.